Hi everyone. Today markets were an absolute rocket ship. You can see this kind of consolidation bottom at the level we talked about. 488.68 was that kind of double bottom we were looking for. Started to creep higher, and then we got that tariff news, tariff pause for 90 days for most except for China, and that was a massive candle. You can see a single hour there, almost 7% right to the 144. Arguably it was even faster than that, so just an absolute rocket ship straight through these levels here. And then you can see we closed right on the high, drifting higher in the after hours. The level is 550.12 for that next resistance, but let's take a quick look at the charts and see if we can find anything that shows a different story. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So like I said, in news, we got a temporary drop down to 10% for everyone except for China. China got an increase because of their retaliation. So 90-day pause at 10%, and markets loved this. Of course, the effect was immediate due to a lack of respect from China, but the fact that everyone else didn't necessarily do reciprocals, even though the EU actually did push in reciprocal tariffs today. Apparently that was ignored and dropped down to 10%. I wonder if they're going to drop theirs down or not. We also had Canada and Mexico doing reciprocal tariffs. Are they going to drop theirs back down to that 10%? I still think the 25% from the fentanyl tariffs are still in place, so you have those a little bit all over the place, but supposedly 10% for partners for 90 days for that trade negotiation with countries that did not retaliate, which Trump said was 75 countries. They were trying to negotiate in good faith, and he wants to give them the opportunity to do so. You could argue that this is a little bit of a sign of weakness from the United States, or this is Trump making a good decision, in my opinion. Everyone was kind of taking it on the chin, and I don't think it was realistic to get where he thought he was going to get in such a short period. So he's going to give these countries the opportunity to talk with the Treasury Secretary and members of the cabinet to try to put on a better deal within that 90 days, and hopefully a more level playing field for the United States and really for the world. Moving over to fear and greed, 17 was the finish. You can see the previous was a 3, so obviously we got a massive step higher. Still very much in extreme greed, but look at this move here. Absolutely V-shaped, massive move. Strength continues to be very weak. Breadth continues to stay very low there as well, but I wonder how that's going to show on the indicators later, so we'll take a look at that one as we always do. Put call ratio got all the way to a 1. That is about as high as it goes. Interesting to see that. Volatility obviously cratering after hitting that kind of peak level above the 50 there, and then safe haven demand. Interesting to see that stepping up into regular fear, and then junk bonds. Huge move here for junk bonds back into neutral, so bonds had an absolutely great day, along with everything else, of course. But of course, all of the major indicators are still in extreme fear, which means maybe markets have a little bit more room to the upside, even with the massive move today. Moving over to the economic calendar, you can see the 10-year yield actually went up from the previous. Not great there. Didn't see anything interesting out of the FOMC minutes. Of course, those were most likely overshadowed by the Trump comments. And then for tomorrow, you do have that look at inflation data tomorrow. So core expected to step down, headline expected to step down. The core month over month is stepping up slightly, but if these year over year numbers continue to come in line or slightly below expectations, I think we're in good shape there on inflation and potentially looking for some cuts this year. Still hoping for 2. Maybe we get a little bit more depending on how the economy reacts to the tariffs and everything else going on. We also get federal budget tomorrow. Want to see that continue to stay low, stepping down from 300 to 100 billion. 30-year bond auction tomorrow as well, Fed balance sheet, and then we have a little bit more data there for the Friday. Moving over to the charts, looking at the S&Ps here, you can see we got a touch of the trend line, touch of this low back here. We took out the low in August. Pretty much everything was going to plan, and then we got the massive up candle, 10.5% in one day. I think that's probably the biggest I've ever seen. Huge up move in a single day, closed right on the high. You can see we're right in the same consolidation range, momentum stepping to bullish, huge volume, RSI, everything looks crazy good now. Obviously, we're right at the low of this consolidation before the big drop. We filled this first gap. We're going to go back and fill this second gap up here. 21-day moving average is right there at 552. So you got some definite areas in here. We're going to put an indicator on that 21 EMA, and then we'll put it right here at the open point of the 3rd April. So we're going to watch that zone in here. If we can get above it and push to the trend line's in there around 563. Certainly in play for tomorrow. That would take you into this kind of consolidation range here and then start to touch these consolidation lows in here as well. So again, everything looks super bullish. If we can continue to drive, I'm sure all of the short terms are extended with that kind of a move. Let's go ahead and look at them. And you can see it here on the hourly, got extended on the hour up into the 71 on the RSI. We haven't seen an overbought indicator for a couple of days here. Back in the end of March was the last time we were overbought, and now we are getting into that zone again already. So do we see some kind of pullback just because of the magnitude of the move? You also got the 200 SMA sitting right there at 544.91. That could be interesting. In terms of levels though, my normal levels, 540.90 is your support, 550.12 is your resistance, and then you can see the trend up there just above my level, 559.76. So again, momentum, maybe we get a little bit of pullback, just a hesitation, maybe come back and touch the high from here. That would be interesting. 525, these moves are massive, so that's something to keep in mind. Even if we did go down, that's about 3 3/4%. Touch that previous high, hold the high, and then push to a higher high. That could be interesting. And then, like I said, you have this kind of previous consolidation zone in here as well. So those are the zones I am watching. And right now, I think this could absolutely go either way. Could we continue to rocket ship up to these highs here? For sure. Could we pull back into this zone here? I think that's a possibility as well. Moving over to the SPY charts on the hourly, obviously we're back into bullish conditions here, but you can see we're already back above that upper ATR band. So we pushed right to the level, hesitated there for a moment, and then continued higher. Can we pull back, establish that kind of higher low setup? I do think that that's a possibility. Can this continue to be a rocket ship? For sure it could. And then looking at it here on the daily chart, this doesn't look as strong, right? So you're just pulling back into the kind of more median price range, 21 EMA, middle of the range, still very much bearish conditions. Is this just a massive relief rally, pulling in a bunch of bulls, and then we're going to dump from the same consolidation to a new lower low? You still have to play that. You still have to assume that that is a possibility. This is a news move. Is it going to hold? We don't know for sure yet. Want to see how it interacts with this previous consolidation. Moving over to the NASDAQ, you can see we did pull back into the same zone. We touched all those same levels that we saw on the SPY charts, consolidated in here, right at this low. We talked about that being a critical zone, and sure enough, it was. Now we're pushing back up into this area here. Again, you have to assume that this is not out of the woods yet, right? So you have still very much a downtrend. We're still well below all the EMAs and SMAs. We did get the dump off. We now got the retracement. Are we going to get another lower high and a continuation to a lower low? Or is this going to show more strength and start to push through back into this upper range here? It's hard to say for sure. Moves like this with such magnitude, can they continue to run? We're just going to have to continue to watch it in here in this consolidation. And then turning on the levels here just to give us something to work with. You can see that major trend line in here. That's where we're at right now. Again, for some reason, it's not showing it here on the daily chart, but this is the major trend, and it is that same trend line that we had here. But we're right there, waiting to see if we can get above it or not. The next level is 471. And then your current support 459.02, right at that 200 SMA on the hourly chart, which is at 460.28. So we're waiting to see if this zone holds. Again, we could pull back to this kind of wick high in here, somewhere around 438 to 440. Hold the higher low and continue if it's going to have legs, or is the daily chart going to prevail and we're going to get that lower high setup continuation lower? Moving over to the Tasty charts here for the Qs. Again, we pulled back into the middle of the range here, still very much bearish conditions on the daily chart. Are we going to reject from here and go back to that lowest ATR band? I don't think you can realistically say that's an impossibility. You can see we're right at this consolidation low. We're testing that level now. Are we going to reject from here after filling these gaps? Certainly a possibility. But looking at the hourly chart, just to show it here, you can see we are in bullish conditions. We're obviously super overbought, way above that upper ATR band. Not as much as you would suspect. That upper band right now is at 457.30. So we're above it by about $9. You could absolutely pull back into that zone, test some support, and then continue higher. Trailing stop right now is 441.90. Moving over to the Russell and the Dow, you can see both of these had great days as well, 8.5 and 7.8% respectively. Pushing towards that 9 EMA, we did touch it there at 190.78 on the Russell. Huge volume, everything continuing to look really, really strong in the short term. But again, still very much a downtrend. This downtrend structure has not broken. In terms of levels, that 191.89 level, very, very important. You can see this key pivot point back here from April 18th, and that is exactly where we are right now. So we're in this zone, consolidation low, dip low, pivot point rally, testing that level. You can see we already showed a little bit of rejection from there, so I'm just not willing to say that this is the all clear and we're just going to rocket higher back up to all-time highs or anything crazy like that. But of course, in the short term, we are bullish. And then looking at that Dow back above the 404.47 level, next one is 412. 21 EMAs right there at 412.12. Watching this zone, watching this consolidation low. You can see that clean pivot point from 13 March. And then same here, this consolidation, you have that next level 412, which was the pivot from 30 August. And we'll see if we can get to there tomorrow. My guess is we probably still go a little bit higher here, but I don't necessarily think that this downtrend structure is going to break, at least not without some kind of pullback and then continuation to the upside. Moving over to the Mag 7, you can see we did pull back right to that major trend line. Again, this downward structure is very much not broken. Are we just going to retest this and then continue lower tomorrow? Certainly a possibility. Do we push through here back up to this zone at the 290 area? Also a possibility. Realistically, we're right in this consolidation. And on a technical basis, I would call this bullish, right? So you have a consolidation breakdown, pretty quick rejection back into the consolidation. From a technical basis, I could absolutely see why you would want to say this could go higher, but there are so many fundamentals driving markets right now that the technicals just don't play the same way, in my opinion. Moving over to Apple and Microsoft, pretty much the same as everything else. Big breakdown, big retracement. Didn't fill all the gaps here. We're right at a level. 199.54 is your resistance. You also have trend resistances here. If you can get through there, then you're looking for this 207 to 211 area in here at this consolidation low and those EMAs. Again, structure still very much bearish. And then looking at Microsoft, back through this consolidation, headed towards that consolidation high, 394.22 is the next level. And then above that, I don't have anything really until 413. You have a ton of consolidation areas in here. I could see why you might want to watch this kind of 404 area, 404.24. But realistically, if we get into this zone, I would expect to at least touch 413. You also have those bigger EMAs up there just above at 414 and kind of this 418 area. Moving over to Tesla and NVDA, you can see Tesla was up 13.6%, got through this 264 level, 280 is the next one. After touching the low and rallying momentum, stepping to bullish here, the weekly chart continues to look pretty good on Tesla. It has been for a while, but now it looks even better. And then look at NVIDIA, 21.23% on the week. Looking at just the day, though, that's 18.7%, absolutely massive. We said 90 was an opportunity, and it sure was. Touched that level, held it quite quickly, and then rallied through back into this consolidation. 116.70 is your current resistance. 106.64 is your support as we broke through that level here today. Moving over to staples and discretionary. Staples was up 3.8%, and then discretionary is absolutely massive, 10.8%. Huge move there. Obviously, staples didn't fall as much, and structurally they're about the same. Discretionaries fell much, much more, and we are in this same consolidation. So support is 193.81, resistance 197.14, and then you have the 200 sitting above there, close to that 203.98 level. And then looking at staples here, you can see the zone 80.20, somewhere in there makes sense. Momentum on both of these stepping to bullish. Can we get more continuation? For sure. Overall, still the same thesis. Can it reject from here and continue back to these lows? Certainly it could. Moving over to breadth. Breadth obviously got a huge pop, 784% on 20-day breadth. We went from a low of 1.6 and ended up in the 20s. So breadth still very much well below that 50 range, but huge gain on breadth today. And this will likely push quite a bit higher, in my opinion, back into the kind of 50 range. I wouldn't expect a major rejection until we go at least a little bit higher into that zone. Can also extend out this trend line there. That's in the kind of 30 to 32 area. That's interesting. And then 50-day got as low as 4.2. Again, we said this was about as low as it goes. got a really strong bounce off of the catalyst and off of those lows. Can this go back to the 30s, maybe the 40s? Certainly it could. Then we'll see what happens from that key zone here. Moving over to the dollar, I just want to highlight that the dollar did rally really aggressive on the announcement. You can see those huge up candles on the hourly chart. Still negative on the day, just a little bit, basically flat there. But look at this candle here into the open for the Thursday session. You can see that Thursday candle open, and we're starting to see a pretty dramatic sell pullback style move. So just something to keep in mind. We can absolutely see a rally. Higher low setup continuation. The dollar is not buying into this rally super aggressively, at least for now. Moving over to bonds, we said bonds were an opportunity at the 91 range. If we got to 89, even better. Same here on TLT. Look at that wick low. The low of the day was 85.89, touched my level by 1 penny, dipping below it by 1 penny, and then bouncing super aggressively, finishing up about 0.5%. So we said this was an opportunity anywhere in here, and sure enough it was, at least for now. Are we going to get that continuation through? Still remains to be seen. We have that 10-year note. We have those auctions continuing to play out. We have the Fed balance sheet continuing to roll off. So we'll see if that continues to matter at all. But overall, I like this big dip low, big key level so far support. And it is kind of interesting how much confluence there was at key levels on this announcement. Moving over to the VIX. VIX fell about 35%. Big move down, more aggressive than we would have guessed. But now we're in a zone of support. Are we going to kind of hold a higher low and push higher? Still a possibility. Are we going to push through here back down into the kind of 20 to 23 range? Also a possibility. So key pivot point as we head into that CPI tomorrow. And then moving over to my accounts, did I make money? Yes. Did I make as much as I could have? No. And it is an important talking point. If you cannot kind of dedicate yourself to the markets in that moment, it's a good idea to stay out of them. And that's pretty much what I did. I had puts, sold some puts, and then I sold some more puts, made a little bit of money on those. 2 trades, really in and out on 2 trades. You can see it says 7, but it was really the same couple trades, just watching it at key levels. Ultimately decided to hold those short puts, and then those obviously did really well on the session. Again, nowhere near the $50 gain that we could have seen, but I was engaged at work, and that's totally fine. Made a little bit of money, and that's what I try to do every day. In terms of positions, I think we're at a key level, so I didn't want to hold anything. Could absolutely go either direction. I'll be watching that zone tomorrow. If we break through, obviously stay long. If we reject from there or hesitate, I would be very careful to the downside. Obviously, there's fundamentals, but on a technical basis, the market doesn't look too much better than it did previously. Let me know down in the comment section what you thought of the markets today. What did you think of the announcement? Was it warranted for a 10% move, or do you think that was too aggressive and we're going to get rejections lower? Let me know. Otherwise, like and subscribe. If you got any value out of this video, make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.